Hello, everyone. Stephen Green here. First episode right after Christmas holidays. I hope everyone had a great holiday. We've got the incredibly well dressed Drew Taylor. Drew is an investment advisor with the Kitchen Wealth Management Team for RBC Dominion Securities. Drew, give everyone a big wave. There we go. All right, I wanted Drew on today. I wanted him to talk a little bit about what his top three things are to watch for in 2019 on the markets. Drew, over to you, buddy.
All right, thanks, Stephen. Thanks for the intro. Yeah, so a couple things we're going to go over here. So one, I do want to make a comment. Just we've had a lot of our clients been reaching out to our clients, just asking about what's been going on in the markets. What are our thoughts? Are we heading into a recession? Things like that. And the Coles Notes answer is absolutely not. We've got a lot of indicators, coming from the economy and some of our top analysts saying that, employment is at all-time lows, or unemployment are all-time lows. Houses are being built, still continue to being built. People are still spending lots of money. So, yeah, we did have a little blip there, but we were very confident that things are going to continue to roll, looking into 2020. So, yeah, we definitely are at the end of a bull market cycle here, but definitely room to run. Jumping into three things that we're looking for and things that we're keeping a close eye on. The interest rates in the United States. Yes, I know we are in the Canadian economy, but we are the United States little brother here. Things that we're watching, and that's what we've seen a little bit of the more recent rally, is that the U.S. were scheduled to do, a couple of interest rate increases, over the 2019. It looks like they're tabling that for now, and the market's actually built that into their pricing. So that's why we've seen quite the surge over the last couple of weeks. Not to say that they won't increase interest rates, but it sounds like for now, they're going to slow off on doing that. Second thing, big thing. You were seeing it every day. Every time Mr. Trump gets on his Twitter, trade war with China, trade war this, trade war that. So really, we think it's more talk than anything. Typically he'll come, really aggressive, come out and say, hey, the world's coming to an end, and then he'll reel it in quite a bit. So, they definitely, there's some issues that need to be resolved here, but this guy's coming up for re-election here. There's no way he's going to blow anything up. So, actually this morning he said trade talks are going great, and sure enough, the markets were up. So we do think that we're going to continue to monitor it, but it's never as bad as, the media makes it out to be. Last thing here, we're going to pump up Canada a little bit. So, over the last couple of years, Canada has actually lagged the United States. When we look at, our major index, so the TSX, it's kind of trailed behind the S&P 500. So those are the top 500 companies in the States by market cap. And so we just read an interesting article and some pieces, did some research. And right now, it's the first time in about 10 years that Canada is actually, our stock market is trading at a very deep discount. So, we've heard a lot of headwinds, increases in mortgage rates, less spending, things, a lot of economic headwinds coming in Canada. But from a pricing standpoint, we're seeing a really big opportunity, investing in the Canadian market. So, we're looking at, shifting some of our portfolio and rebalancing, maybe go a little bit heavier in the Canadian markets.
That's fantastic. Okay, good. Those are three really important things. I only go on Twitter now to watch the real Donald T. Trump or whatever his name is. So yeah, you know what, we're so susceptible to what goes on down there. So hey, Drew, thanks a lot. This has been awesome. Your info is below on the screen there. So if anyone has questions, don't hesitate. Reach out to Drew. Reach out to myself. Until next time, talk to you soon.